All right. Well, thanks, Jalapa, and thanks for hosting the 8th annual conference here. It's always a treat. Thanks for having me back. So let's dive right into it, because I think we got like 30 minutes, and we have people who have a lot to say on important topics. I think it's really interesting. Just before sort of introducing this panel, it's really interesting that we follow an open banking panel. I think open banking and bank and fintech partnerships are sort of the combined infrastructure that's stitching together the increasingly unbundled financial services world. And they're both incredibly important sort of legs of the stool of how we're going to make all this work. And so I find it really fun and interesting to think about both and how they interrelate to each other anyway. So glad that we followed that panel. But it's going to be a hard one to follow because it was quite entertaining. So why don't we start with the panelists introducing yourselves? Let's just go down, start with you, Amanda. Introduce yourself and your company sort of, in a couple seconds, and we'll dive right into the discussion after that.
Thank you. Amanda Swoverland. I'm the Chief Compliance Officer at Unit. Unit is a financial platform infrastructure that allows banks to offer digital products, whether in their own brand or with other branded parties, to enter into the marketplace. It's fun to be back here. I actually started my career at the Federal Reserve Bank of Minneapolis as a consumer compliance examiner, so spent some time here doing my early training days in Philadelphia. So it's great to be here, and excited to be on the panel with some fellow builders in the marketplace. I think while we each have unique twists on what we do, it's incredibly important work that all of us are doing. So happy to be here today.
Peter.
Great, thanks for having me. I'm Peter Hazlehurst, CEO and co-founder of Synctera. Somewhat similar to Unit and to my friend Chris's Treasury Prime, we're in the business of helping banks enable banks to do banking services for non-fintech. Oh my God, what's going on? Time slice. We allow banks to expose their APIs to their fintech partners to help them build banking services outside their experience. So think of us as enabling someone to add a bank account or a mobile wallet to an existing experience, particularly in vertical SaaS, where companies are seeking to add business banking to everything else they do.
Bill.
Phil Goldfeder. Jonah taught me everything I know, so anything I say could be put back on him. CEO of the American Fintech Council, the fastest growing standards-based trade association based in DC, representing fintech companies and innovative banks offering embedded finance. Many of our members partnering with the companies up here and looking to create a pathway for a financial future that works ultimately for the consumers.
Chris.
Hi, thank you for having me. I am also honored to be here. I'm Christopher Dean. I'm one of the founders of Treasury Prime. Treasury Prime is a software company that allows banks to have a platform to talk to their fintech partners. We all have a similar worldview. I think we all have very different theses on how we get there. We're all doing our thing, and it's all very different under the hood. But I think a lot of people don't understand what we actually do. Because they say, you're like Plaid, right? I'm like, no, I like Plaid, but I'm not like Plaid. Plaid is, I would say, very broad but shallow. And we all are, including Treasury Prime, are narrow but deep. Like I like to say, on the deposit side at one of our banks, we can do anything the bank can do. But if you're not at our bank, you can't do anything. And that's different than Plaid. You can find your balance or do some identity stuff at basically any U.S. bank. That's how we're different.
Great. So we've started to scratch the surface on what it is you all do. We've gotten a couple different pieces of terminology on the table and a couple different explanations. But let's take a slightly deeper dive and just talk about what is this middleware. It's become something of a contested term, Mike Sue was talking yesterday about middlemen in financial services, and I'm pretty sure the word middleman was used derisively. So why do we have these middlemen? Why add another layer of complexity here to what's already a relatively complex financial stack, if you will? Peter, why don't you go first?
So I would say the definition of middleware is sort of subjective and so forth. But I think the key thing to think about is at a bank, you can have a piece of paper that equals the ledger of all of your customer accounts. And in the old days, we had big ledger books and we did all of that sort of stuff. And along came companies that built core banking systems that made it a digital version of that. What we do at Synctera is literally the same. So we have a core banking, mini core banking system that calculates interest, figures out where payments need to go, moves money around. And it's not an interception or an in-between with whatever the bank is doing on their core. It's adjacent. It's the same. It's basically running two core banking systems. And so for all intents and purposes, we generate everything that a normal core banking system would do. And it's not sort of a bridge between fintech and bank. It's a new part of the bank's operating system that they're using to support their customers.
Chris, Amanda, anything to add?
I agree with what Peter just said in terms of, how we're structured as well. But I think one thing that is really important to remember as we have this conversation is why did we exist? Why did we come into this space? I love data. There was a survey from the Motley Fool that said 91% of people will pick their bank because of a better digital experience. We actually did a poll ourselves. And it was kind of fun with small businesses. A third of small businesses said that they would rather go to the DMV than to actually go to a bank and get their small business loan. So it is very clear that consumers, small businesses want their financial products and services in a more digital format, and they want to see improvement for that. Most banks, short of the most large banks in the US, don't have massive tech budgets. They don't have the ability to build these things themselves. And so they need to partner with companies that will allow them to reach consumers and small businesses where they are and with the context that they're looking for. And so I think that that's why companies like us exist in this ecosystem, is because there needs to be a new way, an innovative way of embracing this. So whatever we want to call it, whether it's middleware, infrastructure, I'm sure there'll be a new term in 6 months from now that everybody's using. That's just the terminology, right? I think what we need to focus on is the substance. What are we actually here to do? And, is it to bring better financial products into the ecosystem?
Phil.
I was just going to say, companies like us, I'm nervous. Maybe I don't truly understand what I do. Let me just say, and I've said this to bankers associations all across the country, right? Community banks or any bank that chooses not to innovate is going to be dead, period. Full stop. Banks, responsible banks, are embracing innovation with the responsibility that they've been given for hundreds of years, which is protecting the integrity of the system. And when done right, with the right partner, recognizing the right roles and responsibilities, you're creating exactly what Amanda said, right? Consumer access and a better consumer experience. It is the way, look, my kids, it's the way they interact. All my kids have bank accounts and they are not with traditional banks, right? Period. And so when we think about those partnerships, again, it comes back down to the challenge of core competency. Who's doing what is everybody's role and responsibility, and how are we actually doing that? And those are conversations that are not so simple to answer. I know some people want to paint it with a very sort of black and white brush, like, oh, do this or do that. I think there is middle ground. But I think there's a challenge because inherently, as we sit here at the Federal Reserve, is you have to explain this, right? Especially to the regulators who want to understand, whose job it is to ensure that those protections are in place. And so I think that's the challenge we find ourselves today. I say this a lot, we're a standards-based organization. But what does that actually mean? And the answer is we need to, as an industry, understand where those lines are so we make it easier for the regulators. Because in the absence of, and I'll say this to my three partners here, in the absence of an industry defining itself, they're going to be defined either by the consumers, by what's on the front page or what's written by one of the bloggers on a Sunday afternoon or Sunday morning, or what their regulator says. And that, unfortunately, is not always the full story.
Yeah, middleware is tricky. I mean, it's a technical word that means technical thing, and then we use it in a non-technical sense, so just ignore that. If you're thinking it's a terrible idea to have Synapse decide to move money around and make decisions about banks, yeah, you're right. That's a terrible idea. Don't do that. That's a way to get a consent order, right? That's a bad idea. Like I would say that if anyone outside of the bank is making a decision about who and how to bank someone, that is, you should not allow that, full stop. That's consent order land. Don't do that. We don't do that. We have no desire. We don't make any decisions for the banks. The banks all do everything themselves. However, if you want to have a successful bank, especially the banks, not the top 50, but the rest of them, oh my, you got to innovate to stay relevant. You have pressure from the super regionals, the national banks. A lot of your loan income's drying up, and you need a different path here. And there's a lot of innovative banks who are finding that path, and that is good for the banking system if you put the banks in charge.
I think there's a sort of a two-sided problem. One is, as we've talked about, banks and their capacity to add technology on top of their existing core banking systems and so forth, which generally speaking is zero. Unless you're a B of A or a Chase or a Citi, you don't have the infrastructure or the resources to do anything custom or special or unique in your core banking system. That's one side of the problem. The other side is the place where consumers are. My kids are all in Discord. They have a wallet in Discord. It's real money. Under the covers, some bank account somewhere is hosting that money. And we all know that Discord is really good at communications, but is very naive or early in the market of understanding what banking is and fintech is. So they need companies like us that can act as a support system to give them all the tools and technologies they need to do to be able to even work with a bank in the first place. So the problem isn't just on the bank side, it's actually on the innovators as well, because the work to do to build a solution is really, really high if you do it from first principles. And very few companies have those resources to do that.
I think it's a great segue into a question I was going to ask, which is sort of how did we get here? And I think there are two panels on this topic today. And I think there are two panels on this topic because this has been an area of really intense regulatory focus and scrutiny over the last several years. A couple numbers, there have now been 40 public enforcement actions against banks who are, specifically related to their activities in partnering with fintechs. This is going back to 2021 or so. There have been 18 rules or pieces of guidance either proposed or finalized over the last 4 years by the regulators. 2 regulatory agencies have set up what they call novel activity supervision programs, focused in part on bank fintech partnerships. So a lot of focus, a lot of swirl. That's why we're here talking about it. Chris, you invoked Synapse a moment ago, but more broadly than Synapse, how did we get here? Why are there 40 enforcement actions? Peter, you just talked about how hard it is to sort of do this right from first principles, and one suspects that not everybody did that hard work over the last 5 years. Is that part of the story? What else are we missing?
I'll jump in. So I think the problem with banking and payments is there are 2 or 3 relatively straightforward APIs that seem to magically describe everything that's going to happen. ISO 8583, which has been around since the 80s, the 70s, the protocol by which ATM machines talk and issue deposit and credits and cash into consumers' hands, has been around forever. You read the spec, you say, hey, I'll code to that. That seems great. Now I support debit cards. The problem is, if you then go and look at the MasterCard list of things that can go wrong, it's about 10 books deep of problems and issues and things and exceptions. And so payments and banking is simple to understand at the concept, but super difficult at the implementation. And it's a game of edges. We're 4 years in, 5 years in, and every single day we still discover a new type of transaction that we hadn't seen before. And we think we're reasonably mature. The reality is FIS, Fiserv, my alma mater, Phoenix at Finastra, they've been doing it for 30 plus years, and even they still find new stuff every day. And so I think people underestimate the complexity of how to build these solutions, and as a result, don't finish the product. And so you end up in production with things that don't work. You end up with things to reconcile. And then there's a human element, which is if you don't actually do the reconciliation at the end of the day to say, hey, we found this new thing, what do we do with it? Then that compounds and gets worse over time. And I think what we've seen with some of these enforcement actions is even if you had the tools, you weren't using the tools to do the work, which is weird because banking is straightforward. You keep track of the balance, you see where the money goes, and make sure that you've got a copy of it all. But we seem to have forgotten that you're supposed to do that no matter what type of customer it is, whether it's a fintech customer or not.
Yeah, I think we're still on the first day here. Like, there's a lot of innovation happening. Jim and I started Treasury Prime because we saw the gigantic need. Like, we were at SVB, they had bought our last company, And the inundation of requests to do stuff was huge. Like CRB, same, right? Just the amount is huge. And we said, well, there's not a single bank that can do this, so we got to have lots of banks to do it. And then I think during that time, a lot of other people saw that exact same thing, and they did whatever they were going to do, right? That we had our way, someone else had their other way. And I think a lot of banks back then said, oh, I can just rent out my charter, right? That's okay. I can just like hand out some like magic keys, and a fintech or whoever will know how to manage the complexity of a banking system. And surprised they don't, right? It's really hard. You have to have a good bank there and a good bank partner, because our system relies on the banks being safe and sound, right? That's how we rely on that. It's a good system. It's a lot, but it's a good system. And if we ignore that, we have problems. And I think this is just a correction where we, as a financial system, are saying, actually, we went too far one way. Let's pull it back a little bit. And we're going to pull it back and forth. But I think generally what's going on now is good.
So, sorry, Amanda, I would just maybe a little bit more controversial, and I apologize in advance. I mean, I don't have to explain to anybody in this room, kind of the elephant is really what the system looked like 18 months ago in terms of the financial services, fintech bank ecosystem as a whole looked like 18 months ago or 24 months ago, and what it looks like today. Who was sort of pulling the strings and sort of walked around sort of with their chest pumped out 2 years ago or 18 months ago, and who is doing that today? What makes us unique as a trade is that we represent traditional banks and fintech companies, and so we get unique perspectives into the inner workings of how things work. There's not a week that goes by where one of my banks said one of their biggest pain points 2 years ago was how do they speed up onboarding, right? How do they speed up onboarding, because they want to make their fintech partners happy, how they speed up onboarding. Today, those who didn't speed up onboarding are saying, how do we slow down our onboarding and how do we keep our onboarding slow, right? There is, I hear this all the time. I get the call as sort of representing the banks, or we're a fintech company, we're looking for a bank, right? I get that call all day, every day. We're looking for a bank, we're looking for a bank. 2 years ago, it was quite the opposite. Banks were looking for fintech companies. And sadly, when you think about banks who maybe see that desperation sort of writing on the wall, say, oh no, we've got to do something different and we've got to maybe cut a corner. Obviously, I think we've all learned that is not the way to do it, and the right way to do it is to remember your job to protect the integrity of the system. I think that shifted today. And so now I think everybody is taking that deep breath that is necessary for whatever reason. I'm not going to blame it on any one company or any one consent order, but for whatever reason, we are taking that breath now. And we're at a very unique moment where we can actually maybe get this thing right and move forward in a positive way.
Yeah, I do think that, I just interrupted Amanda, I'm sorry. I do think that mostly the fintechs had just the wrong model. They just do. It should be like a SaaS model. I can start something in my garage with a AWS account and an editor and a dream, and I should go. No, this is like launching a rocket ship. It is hard. It is expensive. You have to apply the right capital. If you don't know what you're doing, you got to find someone who does know what they're doing and help you out. And it's expensive. And the banks agreed for a minute with the fintechs that, yeah, it should be cheaper. And they cut their diligence down. I mean, not my guys, but in general that happened. And yeah, it just became, it said, oh, we'll make it cheaper. We'll make it $1 instead of $100. Dude, it costs $100, right? It's expensive. And if you forget that, you're never going to get anywhere.
Amanda?
Yeah, I think that we're at just a really important time in the evolution of this. I say this all the time, but I was the chief risk officer of a sponsor bank for a number of years and saw the programs grow, and it was during the prepaid, when prepaid was big. And there were consent orders issued, and those exams were tough. They were grueling, and the regulators were learning about prepaid and learning about things, and got a hold of a very common knowledge base across the ecosystem. The prepaid rule was issued, and now it's very well understood. And I don't think our models are that much different than the prepaid ecosystem are today, but there are nuances with different things, and there's definitely more of that. And so even though we are at a moment that feels very turbulent in this space, I actually see, you can see the sunshine coming, right? There's a lot of regulation that's out there right now that's proposed. That's amazing. We may not all agree with the regulation that's out there. We may not like every element that's with it, but it's going to give clarity. Even when you look at the third-party guidance that has come out over the years, the first like third-party guidance that came out just a couple of years ago that talked about fintech bank relationships didn't really touch on the stuff we were doing, right? But then when you read the new RFI that's out there, it got it. It's asking the right questions that are in the ecosystem. And so I think that, part of it is that it grew really fast. And a lot of banks got into it, some really quickly, some more, slowly. And I think regulation is catching up with some of those things. And so we're in a moment where everybody's paying really close attention to that. So I think that leads to some of the orders that are out there. But I think it is leading us to a moment where everybody can stop and take a breath and step back and say, how should we do that? Because I think everybody that's in this room and here on the stage is trying to do the right thing, which is bring consumers better financial products.
Yeah, so let's go there on how we can fix this. I think I do want to emphasize the point you just made, which is, consent orders in this space, not exactly a new thing, right? So MetaBank, now Pathward, WebBank, BankCore had consent orders over a decade ago, 2011, 2012. Worked through those issues. It was hard. I am told there were several million dollars spent remediating the issues identified in those. But one suspects that the platforms are more resilient as a result. And I think, you're all describing a different version of, some banks seem to think there was a free lunch out there and it turns out there's not, or they thought there was $1 lunch and it really cost $100 to use Chris's numbers. And I think everybody's recognizing that now. So, on a go-forward basis, it seems inevitable that, if we're going to recognize the real costs of running these programs, which do have some inherent complexity in them, that it's going to be, add some friction to the system, and maybe we won't have, quite the deluge of fintech programs we saw through the sort of bubble era, if you will, 21, 22. But maybe we're in a more stable footing. So how do we go? There's a lot of, regulators put out an RFI. They've put out some third-party guidance, but it still doesn't quite drill down in, into the nitty-gritty. I didn't see any references to the kinds of ISO standards Peter was talking about. So how do we take the next step here? Phil, you talked about AFC as being a sort of standard-setting body, and I was really struck by Cecilia in her remarks this morning, mentioning in her sort of train example the role that customer protections and standardization played in really giving lift to that industry. How do we? There's been some discussion about new standard setting efforts in this space. Is that something the private sector is ready, willing, able to take on? Is that the right next step here, or how do we move forward and take the next step?
The answer to your question is yes. If Brandon Milhorn was in charge, I don't think we'd have any of these problems. Literally, where we started the conversation around standard setting was when he was at FDIC, and we would go in, meet week after week or every other week to have these meetings about how do we think about fintech as a bank, as a fintech company, and unfortunately, he's continuing his efforts now at CSBS. The answer is yes. Again, I come from I'm a recovering politician, right? And so the idea that perception is everything is real, right? And so if we don't create the perception, or at least talk more about what we're doing and why we think it's the right path forward, you can't expect regulators to understand what we understand, and not me. These smarter folks understand, because they're just not doing what we're doing or what's being done every day kind of on the inside. And so they're doing the best they can, and unfortunately, we're all seeing kind of the consequences of that. There is a path forward. I think standard setting is not the answer. I think it's the next step in terms of clarity is key. Creating that clarity in terms of what the expectations are, and I say that as an industry, right? The industry needs to do a better job of talking about those expectations. But again, it only ultimately works if the regulators are listening. You mentioned the RFI, and I'll take my criticism to the government side now for a moment, in that it's great that you get an RFI from all three regulators, and then you start seeing proposed rulemakings before they've gotten the answers on the RFI, right? You talk about a rulemaking on broker deposit long before you've actually ingested the comments to the RFI, which are not yet due, right? And so I think the regulators need to also have play a part here. And again, why you need kind of pragmatic regulators who are working together with industry participants to create that model future.
I want more standards. Please have more standards. Like, part of the Treasury Prime pitch is that, like, tired of waiting for people to make some standards up, especially on the technical side. Like, fine, we'll do it. And does that mean we need a zillion banks? Yeah, it does, because they're not going to adopt it. They're only going to adopt a standard, if it is helpful to their business. These are businesses. Will they have to make money? So let's do it that way. I eagerly await that. The thing that I wish the regulators would do is provide more of a framework for how to evaluate how you're managing your fintech partners and that you're doing a good job. The regulators have their own way of doing that for the banks. It is not reasonable to expect the regulators to do that for the fintechs as well. There are just orders of magnitude too many of them, and the regulators are already stretched too thin. So how do you do that? And, like, I have all the ideas, you have all the ideas, we all have ideas. I don't care which one wins. I just want someone to win so the economy can move forward, so the financial system can get more sophisticated. That's all I want. I think most of us want.
I would say, like, there are definitely examples where the industry has figured out a solution. Probably the best would be PCI, and the idea that prior to PCI, people were losing credit cards online, and people were getting their cards stolen, and websites were junky. People were sending cards around in email and all of that sort of stuff. And so you can create great things for consumers, great things for banks, with focus and collaboration. The trick then becomes, once you've got it, how do you sort of ensure that the standards that are set are then being auditable or checkable? So did people meet the expectations? So it's like a two-sided problem. Create the standards, decide who audits and controls, and then figure out, like, remediation. So in PCI, the remediation's pretty quick. If you've got, like, bad leaking card numbers, they're just going to shut you down. Remediation is you're turned off in the short term, but then you can fix it afterwards. So things like that, SOC 1, SOC 2 audits have created a reasonable framework for understanding what's happening. We kind of need one for this category where the bank is extending their border out to the fintech.
We desperately want the clarity that comes with that, and I think conferences like this are great, right? Where there's an open dialogue between regulatory bodies and industry, right? To be able to talk about that, but, like, we want that continued dialogue with the regulators. Ask us the questions, ask for a demo. I think all of us would love to fully explain what any misconceptions might be about our software and our product that's in the market. And so let's have those dialogues, let's have those conversations, because I think that it's those learnings that come from that direct communication that will really help all of us make sure that we're building products that keep the industry safe.
Okay, so everybody wants more standards. So how are we going to get this done? What's the forum? What's the body? Phil, is AFC going to lead the charge? Are the regulators in the room? Is there going to be a self-regulatory effort here? I mean, how do we make some progress?
If it's not collaborative, it won't work, right? If I say this all the time, when you see, and not to pick on anybody who maybe presented yesterday, right? When you start thinking about financial services regulation with politics or ideology in mind, it's not going to last. I mean, you saw it sort of in sort of the last administration. On the way out, there was a lot of things that were done and a lot of rules that were made and then quickly undone as the next Congress came in and the next administration came in. And so to actually build legacy, you can't just propose big things, right? It's nice, but that's not going to create a legacy. You create a legacy when you build something that lasts and that works. And in the name of consumer protection, actually is protecting consumers. And to me, we're seeing a lot of headlines and we're seeing a lot of big moves, but if we're actually going to build the future of finance, you've got to find ways to come together. And so look, it's what we do at the American Fintech Council, right? And the challenge is that it's not just about, banks and embedded finance. It's about buy now, pay later and earned wage access and fintech lending. And literally, I mean, it's nonstop as we think about the innovation. Regulators, regulation, standards needs to move at the exact same pace as the innovators. It has to, It absolutely has to. Otherwise, we're going to be having this conversation every day and every week for the next 20 years as my kids become my age and they have kids, and all of a sudden we're only getting worse and worse and bearing ourselves. So the answer is yes, we take that upon ourselves, but it is not something that is easy to say, oh yeah, we'll do it and call it a day. You've got to get the buy-in from the industry and from the regulators.
So I'm going to repeat my question. How do we do that? Where do we go? Do we need Congress? Do we need a self-regulatory, authority of some sort? Should regulators use authorities they have right now under the Bank Services Company Act or otherwise to extend their reach directly to your organizations or maybe others? What's the right place to look for potential answers here?
I think anything that looks like a core, whether it's a side core or whatever it is, should be regulated. I think you all would want that probably. And like that's something that we can do. Like standards on how to check on the health of a bank we have right now. What are the standards to check on the health of a fintech? I think if we get down to the mode of like, oh, I want, your local regulator to design a technical API, that is a terrible idea, right? We are not good at that, so let's not do that. But we are good at like listing things about how we can make sure the system is safe and sound. We're very good at that, so let's do that. Let's make these standards. I've been pushing for like, what's my call report for the fintechs? Why aren't those made daily? For a long time, like we have stuff in our system to do that. Nobody uses it. I mean, I can see what pages are accessed. They never read them. They should read them, right? The regulator should say, hey, where are they? And if they're not doing that every day and there's no reason they couldn't do it every day, then why? That's what we should do. And I talk to regulators all the time too. And I tell them, and they are trying to catch up. And how can I help them catch up?
I'm a firm believer in success often comes when you let people do what they do best and specialize in things. So we're really great at building technology. Banks are really good at risk management, compliance, all the things that come along. That come along with that, right? There's good and bad in every industry. And a lot of these technology companies that are out there are really great at building end user experiences, right? To do that. But the regulators are really great, and we talked about this on a panel yesterday at the supervisory element of it, right? Finding the risks. And so I think that if we can get past and get to the substance, right? And what are the real risks? And really lean in with the regulators to let them do what they do best and identify what the risks are that are systemic to the ecosystem, and then build the rules and the guidelines and the standards to address the substance of the risk. I think that gives all of us the clarity to build against, not just a checklist of did you collect this, did you collect that? I think there's enough of a framework out there already, but like let's really dig into the substance of what are the risks in these relationships, where do they exist today, and then what are the compensating controls, right? Like risk management has been around for a long time. Let's apply these, detective controls, preventative controls, all the lines of defenses. I think that like if we use common frameworks that already exist and apply them to the business model that's evolving today, I think we're going to be in a really good position. And I think, regulators can do that really, really well. And so, I think there's an area to work with industry on that.
Yeah, I mean, it certainly seems, our experience is certainly that, regulators have, I think, come a long way up the learning curve in the last several years as they focus on this space, but there's still, I think there's still a desire to, there's still an appetite for information on, best practices. What does good look like here? And I'm not sure there's like a solidified view of that among the regulatory agencies. And part of the reason is it's hard. All these programs are different in their own unique ways. There's no sort of vanilla version of it. So it's going to be hard, but I do sense a decent, a good appetite. And this is true across the regulatory agencies, and it's true down at the examiner and supervisor level. Sort of, hey, help us think about what good looks like. So I think if the industry can find the right forum and put some ideas forward, there will be appetite for it.
I would say that we sort of seem to be conflating technology issues with just basic banking. And we seem to forget that the consumer at the other side of a fintech is just a customer of the bank. And all the normal bank sort of processes around, do they have a balance? Are we reporting them? Are we checking them for FinCEN issues? All apply. And if we can hold our bank partners to that bar and say, you just think of our customers the same. There's nothing different about them, other than that think of each fintech as a giant corporate customer of yours. And what would be all the due diligence you would do on onboarding a big corporate customer? You'd do a whole bunch of background checks. You'd do all of that sort of stuff. And then every week or every day, you'd do sampling to make sure it's working correctly. And somehow we got to a place where we were moving so fast, or we got lackadaisical in actually just remembering the basic banking stuff that needs to happen every single day.
Yeah, I mean, I think that's right. The complexity here, I think it does arise from the fact that you've got, banking products being offered by non-banks with other parties in the mix. And I think, Phil, I think you talked about it at the very beginning or referred to it. I mean, the trick here is sort of who's doing what. And that does get more complicated in this space, right? But all the things you have to do, that checklist is still the same. We know what that checklist is, right? It's long, it's complicated, but we know what the checklist is. And so we got to figure out who's doing what, who's accountable for it.
Firstly, I just for credit is due on the question from the regulators. I mean, we're at the 8th annual sort of Philly Federal Reserve FinTech conference, right? So 8 years ago, I give credit to Jalapa, the fact that like the Fed and many Feds were thinking about it, right? Long time ago. Novel Activity Supervisory Program, right? You're seeing that. I think the question is sort of bridging the gap from talking about it at one level, making sure it gets down to sort of where the examiners live. To finish on that point is it comes back down to core competency, right? Everybody needs to come to the table with their core competency. And so the examiner should come with theirs, the bank should come with theirs, and the fintech should come with theirs. But everybody's got to, stay in your lane, right? And that's where the challenge is. It's the inherent, oh, let me help you with this, and you sort of, everybody starts pushing in on everybody else that ultimately creates the problem, which we've seen, I think, in the last, again, 6, 8, 10 months, and hopefully that we're seeing the end of as the evolution continues.
Yeah. I mean, one of the panels yesterday highlighted the asymmetric incentives that face regulators really across their jobs, right? And I think it's, they're sort of damned if they do, damned if they don't. If they, take a hands-off approach and something goes bad, the question is, where were you? And if they step in before something goes bad, it's, well, what are you doing here? We don't need you. So I think we only have a couple minutes, so I want to give everybody a chance to sort of give a closing argument, as it were. Let's restate the case for middleware, or whatever we're going to call it tomorrow. And I think, the broader context for me, and the reason that, we as a firm spend so much time in this space, is that, I really do think that this is the model, or versions of this model are the way that the vast majority of innovation in financial services has come to market over the last decade or so. It has not originated in the banks. I mean, a lot of the new innovative stuff that banks are doing, they're copying from fintechs who got their start partnering with banks. I think this model has been incredibly valuable, and so the question is sort of how do we get it right? It's clear that there were lapses. How do we fix it? So what's your closing arguments?
Innovation and the demand for better digital banking experiences isn't going to go away. And so I think that industry and the regulatory bodies just need to come together and find a collective agreement on how to do this responsibly, because it must be done responsibly.
Yeah, I don't think anything's going away. There's going to be continuous demand for new types of products and new types of experiences for consumers. The trick is we've got to, echoing Amanda's comments, we need to come together and say, here are the rules of the road. You have to comply. And if you don't comply, there's heavy sanctions for those folks that don't.
The 3 people that I'm sitting next to now can tell you this probably better than anybody. Building something is hard, right? Tearing it down is easy. And so finding opportunities to criticize is what you find people are always eager to do, right? Oh, we can criticize anybody else, but you're criticizing the people who spent the years and the hours and the hard work and the late nights and the sacrificing to try and build ultimately a better service for consumers at the end. And so recognizing the value that everybody adds to the ecosystem, even though we don't necessarily always agree, I think is critically important. And too often we focus on just the bad. And I'll say that someone says, you know, and you saw it from Green Dot, from Piermont, from Cross River, a number of banks who did get consent orders said, yeah, we're going to be stronger for this, right? We accept it. Our system was not perfect. We recognize the challenges we have ahead. We're going to take the criticism. We're going to get stronger and make our consumer experience even better. That's not bad. That's something we could build on.
Yeah, I only have a second. So my short answer to all this is, if you make the banks win, we will all win. Like, the regulators are good at managing the banks. The banks are good. The good banks are good at running these programs. Let them do that. Like, put them in charge, and everything will be fine.
Well, I can attest, somebody who worked construction, that demo is way easier than the building part and more fun. But setting that aside, please thank, we're really lucky to have, four of the smartest people in the space on the panel with us. So join me in thanking our panelists.